So the first one, I put up here. This is based off of a new interpretation that the SEC put out, and this specifically are some highlights from Paul Atkins, current chairman of the SEC's speech, talking about those new interpretations. And the critical point here is what I've highlighted in yellow in the top right of your screens here. Not deemed securities are digital commodities, digital collectibles, digital tools, and payment stablecoins. I will note he did talk about digital securities, kind of in the concept or mind framework of tokenized securities. So taking your, I don't know, GameStop shares and tokenizing those. Those are very clearly, in their view, securities, but things like Bitcoin are a digital commodity, right? So do not fall under the security definition. There's another speech, I'm blanking on who that was from, but they also, I think it was titled The End of Howey or Moving On from Howey, something like that, referencing kind of the Howey test, kind of prior interpretation of what defines a security. But all to say, I mean, this is a pretty big new interpretation for digital assets. So Matt, help me understand how do you put this in that broader framework that we're talking about in terms of the US's different policy approach to these digital assets?
Yep. So what this is essentially in the last few weeks, there's been a memorandum of understanding, an MOU signed between the different regulators um, that have jurisdiction or coverage over this new economy, this new frontier within the purview of the United States, right? And then I'll compare and contrast that to what we just saw out of the UK. All right. But to start off, when you say that line central bank independence, slide that scale up to the right, what you would have is one organization, call it in the US case the Fed, would kind of set the perimeter, the regulatory perimeter, and encompass everything, right? And very clearly in the US, with what we just saw, this MOU, you don't have that, right? So we saw the carve out. Cameron, you mentioned these specific terms. Um, Digital commodities, digital collectibles, digital tools. All right, those are one thing. Those were kind of agreed in this setting of the fence posts where the lines are drawn. Those are going to be in the CFTC's purview. And specific to that, I think about commodities trade, right? They're primarily concerned with basically just fairness and pricing, exchange, et cetera, for the goods that really go. They think about commodities, right? We're talking about it right now. Crude carriers traversing from point A to point B on the high seas. They're international transactions, right, involving the shipment of, say a good across different um, sovereign boundaries, right? So
Right.
think about this like CFTC is covering that side of this crypto industry, right? So there's a carve out. Immediately you see there is no um, extreme here where you would have, say, a central bank taking control over all kind of
Mm,
monetary purview, right?
right.
So you're carved up. You don't have one thing owning everything. And very specifically, these new assets that have cropped up. I mean, digital ledgers. Think about that. Like Bitcoin is a ledger money, right? But it exists in a new space. It exists nowhere, technically, everywhere and nowhere, right? You can flip on a node anywhere that's internet connected, um, be your own hub, and so the network kind of lives distributed. Um, you could say the same things, kind of, for other, blockchain tokens, et cetera, whatever, utility tokens. They're not quite like none of them are doing exactly what Bitcoin is, which, they're different products. But my
Yep.
point is those things live in the CFTC's purview, which is kind of like think very kind of abstractly here, but it's the movement of goods from A to B, that type of thing, crossing international boundaries. And CFTC is kind of tasked with the responsibility of maintaining integrity, fairness, et cetera, for the pricing venue, settlement, and trade of these objects, right? Abstract objects in this case. All right. that's kind of telling, right? Because it doesn't fall into the Fed's framework, right? Which is like the private institutional control of money directly, like cartel owned. So the U.S. Regulatory standpoint, like you've got all different stakeholders, all different parties who want a piece of this new pie, right? How are we going to call this business? We're saying right now, like Fed is in the game, but they're not able to block this thing from happening. And we'll kind of see the approach where maybe other jurisdictions want to kind of capture this thing and ring fence it inside of one boundary where you would have, I guess, full central bank independence,
Well, maybe let's
which,
switch that to the
yeah, is
UK and
it?
talk about that then, if you're gonna go there. So
Yeah,
the exact flip
yep,
of that, to your point, Matt, is the Bank of England released kind of their new proposed regulatory regime for sterling-denominated systemic stablecoins. I specifically called out this section on unhosted wallets, and maybe I'll just briefly touch on that, which is basically they acknowledge that some participants, some comments reached out saying, "Hey, if I have my own wallet and I'm storing stablecoins in there, is that going to be legal under the new proposed framework?" And they basically tell you probably not, likely no. Here's some reasons why, and I'll let Matt explain kind of how that fits into this broader picture that maybe the BOE, how they view all of this fitting into their monetary framework.
yeah. So this idea of an unhosted wallet, right? Which, what do they mean by hosting? It's, custodied by a centralized party, right? Who is enveloped inside of that perimeter we talked about of the regulator's ultimate control. So, unhosted wallets, at least in the UK standpoint, those are not wanted. Their monetary framework doesn't want to see that kind of take hold. So they are fighting this kind of new frontier, if you will, this emergent economy. And I think in contrast to the let's accommodate this thing, let's grow on top of this, disruptive innovation, all of that that you're kind of seeing in the U.S. UK is taking the approach. We're going to try to, I guess what you'd say, like absorb and suppress. And why do I say that, right? Well, you go into the actual kind of regulatory kind of guidelines or statutes that they want to see implemented. And one of the pieces on this proposed regulatory framework was limiting holdings of customers and clients of these of stable coins on these hosted wallets. They want to limit that to 20,000 pounds, right? So what is that actually? So it's basically suppressing a like the same monetary unit, right? Pounds on a stablecoin standard, pound or on stablecoin rails versus pounds that are reflected in a bank deposit, which is a liability version of the same thing. What they're doing is they're effectively capping and suppressing UK residents, businesses, et cetera, from adopting this new rail. So it's really that take. If you think about central bank independence, it's a misnomer. It doesn't sound like what it means. What it means is control, like full control of monetary authority within a jurisdiction. We've known this. Like Badgett writes about this back in Civil War in the United States times, like mid 1800s, late 1800s. Even on a gold standard or precious metal standard, there was a recognition that you never really had full control of money within a jurisdiction, even on on a precious metal standard. You never knew exactly the quantity of money in the economy at any given time. What you could do is execute monetary policy to kind of shepherd the way you wanted to guide the economy just based on how things were unfolding. But there was an acknowledgement you couldn't fully envelop and control the thing, right? You had to, it was an untamable beast. The best you could do is, animal husbandry and learn to interact with this thing. Versus like this modern approach is really, when you have untethered monetary standard, everything's liability money, free floating exchange rates, all of that. Um, I think there's this worldview from the central banks who want to maximize their control of money. It's like we want to control everything, right? So it on the other side of this, right? Like who are the other regulators? Well, in the U.S., one of the things we talked about that the U.S. split it out, right? We have digital assets, tools, collectibles, whatever, or digital commodities. Um, and then number four was stablecoins. Number five was tokenized securities,
Right.
right? In the U.S., you have that framework where you during the New Deal (FDR) 1930s, you had the kind of the overhaul to rein in a securities industry. When I talk about that, like think broker dealers, like equity, stocks, everything. There was a layer of kind of regulation put in place on the stock market itself, brokers, et cetera, to basically put some standards in place. That's where we get the
Right.
SEC. Um, in the UK and specifically in the US, right? This is a key differential, right? That universe where we talk about the securities complex, broker dealers, et cetera, that there's a fence post here that's been laid out finally for the first time in 10 to 15 years in what's been a gray area where the securities and commodities industry didn't quite know how to carve up that gray area. Well, in the US, that's been settled with this MOU, and the last step is get it into law, which is this Clarity Act. We expect to arrive here sometime in 2026. In the UK, you've got one entity, the FCA, Financial Conduct Authority, who is kind of the analog of the SEC in the United States, but they encompass everything, right? So what you're getting from the UK with its proposed regulation of this new frontier is basically let's envelop it with our existing like bank regulator and securities regulator, and then we're gonna uh, essentially suppress. And what it comes down to is control of capital, right? What you don't want to see happen is capital leave your system, right? And that's where we get into. We'll talk about gold in a second. But it's kind of one of those things like think about a relationship. Whenever you try to hold on too tight, that's when things want to want to go. Versus when you want to be more accommodative, incorporate this new technology, whatever. Well, turns out usually that works better in life, relationships, all of the above, and you'll ultimately see capital attracted towards that.